All right, so today's Appy Hour is all about managing fixed assets in QuickBooks. And thank you to Ash, our sponsor, NettTracker. Wait till you guys see this. We've been waiting for an app that's going to help us manage our fixed assets with QuickBooks Online, and this is amazing. It's so easy to use. I love your tagline, Ash.
Yeah, well, hopefully it is easy to use, but yeah, it's I'm really excited to be here, so I'm looking forward to the session.
Fantastic. And we've got quite a few people joining us here in Zoom. We also have quite a few people joining us on Facebook Live. So welcome to all our friends out in Facebook Live land. Just going to do a quick introduction for our new people that are joining us for the first time. My name is Heather Satterlee, and I am the owner of Satterlee Training and Consulting. I am a freshly made CPA. An advisor in Rhode Island, and so I help companies and other accounting professionals automate and streamline their internal processes using QuickBooks and suites of apps. So that is my favorite thing to do, is to tinker. Although right now I'm doing taxes too, which I also love. I only do taxes around this time of year, but I do kind of like them a lot. So I've been doing that too. So that's me.
So typically I get to say ditto, but I cannot. No thank you to tax, and no thank you to the CPA title. So with everything else said, I absolutely love integrations in technology and have a lot of fun with it, and always thrilled to be able to share it with all of my peers. So thank you everybody for tuning in. And like Heather said, we have been desperately looking for a solution to be able to automate fixed assets. Because what happens, we kind of know that they just get ignored. It's just one of those things that gets pushed off the sides. So we're super glad to have you here.
Yeah, no, this is fantastic. Huge shout out to our champagne level sponsor, Right Networks, the leading cloud hosting provider for accounting professionals. They have quite the suite of tools for accounting professionals now with their Transaction Pro importer, deleter, and exporter tool. We actually had them on our last session, and also the Audify product as well.
Oh, and can I share?
Yes. Yes.
Okay, so upcoming, lots of people have been asking about desktop. So yes, of course we still love desktop. In fact, we're going to have an episode dedicated to desktop and how to actually make it cloud. So that way everybody can share access to it. So we're going to have Right Networks come on. We're going to talk about desktop and how to collaborate with your desktop client in the cloud.
Yeah, it's all about building that ecosystem in the cloud with QuickBooks Desktop. And I can hear all the people that have joined us that are still, have desktop as one of their best friends, like screaming and celebrating. So that's going to be really fun. Really looking forward to that. So awesome. Thank you also to Ash. I've just said it, I'll say it again, and NettTracker. And like I said, I love your tagline. So fixed assets made easy, very easy. So, and I went through the setup myself, just kind of, looking at it to learn more about it. And it was easy. It was super easy to get in there and set it up. You do a little bit of setup in the QuickBooks Online company before you get started. And then it just kind of walks you right through the process. So that's so true.
Yeah. I'm trying to make it as easy as I possibly can, and every time I try to think of something to make it a bit easier, then I will make it easier.
We like easy.
Yeah, I like easy.
Yeah. And you're an accountant by trade, Ash, and so that's probably why it's so awesome, because you're an accountant too.
Yeah, I try to think like an accountant. I don't like spending much money like most accountants either.
Oh. All right, so Ash, can you tell us a little bit about yourself? And I know it's late for you. You're in the UK, so it's actually 9 o'clock for you.
It's just gone 9 o'clock now. But yeah, I won't bore you too much with my work history. But basically, I've been doing accountancy bookkeeping stuff since I left school, and I've worked in industry, manufacturing, legal firms, accountancy practice. Started off on my own about 10 years ago, just working solely by myself. and I was a heavy QuickBooks Desktop user. And then in 2014, I basically flipped over to QuickBooks Online when I was asked to become one of the trainers for Intuit. So I've been a UK sort of trainer since 2014, and don't hold it against me, also helped write some of the advanced exam questions that the people in the US and the Canada have to endure. But yeah, and then back at last year, decided to try to create this app, which has been running in my head for the last sort of 3 or 4 years, and just basically a chance conversation with one of my musical friends. We got together and started building the app and sort of released it around October last year.
I don't know any app partners that have a bass player and a guitar player who started the company.
Yeah, it's quite something. So so we've got double interests basically.
At least not in the fixed asset space. Maybe in the music space. I'm sure there's lots out there, but I love it.
I don't have any guitars on my fixed asset register, though. I just want to point that out.
Some are expensive enough to be, though.
Oh, yeah.
Yeah.
We have a theory that there's a lot of accountants who are also musicians, and that one of these years we need to, at one of our conferences, have everybody bring their instruments and then just make a makeshift concert.
Sounds like a great idea, except I won't have room for a piano.
We can find you a keyboard. Maybe
Don't they have those roll-up keyboards? The ones that, like, they're totally digital. You just roll them up and you can fit them in your backpack.
Yep.
Well, actually, I've retired. I've had my one and done show in Toronto, and that's the last time I'll ever play piano for anyone. Mark my words.
Okay, Mr.
That's a shame because it could have a huge jam session. It would have been.
Come on, I know 2 notes. What did they give? I got a nickname. It was like 2-Finger Sam or something. I don't know. I got a nickname in Toronto.
Okay, well, forward that slide so we can introduce Brad, because I think it's time.
It is.
So our buddy Brad, we are so glad that you're joining us today, because I'm not really sure how you and Ash met, but you've been working with Ash and talking with Ash on behind the scenes.
Yeah. And just to correct this slide a bit, I'm actually from Calgary, which is about an hour's flight from Vancouver. Vancouver's over on the west coast.
Sorry, Brad.
That's okay. On the west side of the mountains. We're on the east side. We're not too far away. I spend a lot of time there, and I'll actually be at a QuickBooks conference there in June. So yeah, Ash reached out. I believe it was through Twitter, if I recall, Ash. I think you DM'd me.
That's right. Yeah, I did. Yeah, I sort of drop you a message.
Yeah, we just started a conversation, and right away I just jumped on this because, a little bit about me. I am a CPA, the Canadian version. I'm a chartered accountant. That's where I got my designation, and they merged all the designations. So I'm a CPA CA now. And unlike most people in public practice that stay in that field of work and do year ends and taxes and all that stuff, I got bored with that at a pretty early stage and went into industry. So my background is helping to run businesses. So I was a CFO, a controller, a treasury manager, positions like that, where I actually ran the accounting teams for bigger companies. So that's my background, and these days that's kind of what I do. Is I help small businesses, small to medium companies, use software to make their businesses run better. I use QuickBooks exclusively. I do use desktop enterprise for some of my clients. I focus on the cloud, though. I've always want to get them on the cloud just because of the many advantages, and a lot of that has to do with the tools available. So what attracted me about this tool right away when Ash reached out to me was I remember how hard it was to manage fixed assets for 20 years in all the companies I worked for. Now, a lot of bookkeepers that might be listening in, you might not even care about fixed assets, because a lot of times you just wait till the year-end accountant says, here's the depreciation entry, you book it, you're done. But in larger businesses, especially in the mid-market, that have monthly reporting requirements, depreciation is a line item that has to be on there. It's not really negotiable. It's on there. So you have to manage your fixed assets on a regular basis. And then, of course, gains and losses, are a real pain in the butt to calculate if you're going to do it manually. So this is the sort of tool that I would have used extensively in a past life. So that's why I got so excited about it. And I'm using it on my own company right now. As you know, Ash, I've been testing it. And yeah, fixed assets in a small business are the fun assets, because it usually means, your iPads and your computers and your phones and stuff like that. So that's all I have in my fixed asset categories. And it is a great tool because it does allow you to, once you got it set up, it's just going to automate everything for you and take away, it's going to save a lot of work.
Right.
So
I'm excited to see it.
I think any bookkeeper could use it. If your client has fixed assets and you come to them and say, look, I can help you manage your fixed asset fleet with this cool tool as part of the bookkeeping, it's an attraction. So there you go. Talking you up well in advance there, Ash.
Thanks, Brad. I owe you. I think.
Well, we're super excited to have you join us, Brad. Always a pleasure. So
thanks for having me,
taking time
guys.
out of your busy season to hang out with us.
My pleasure.
Awesome. So what we're going to do today is we're having an open mic. We do have a couple of slides and things that we're going to talk about, but really we're just kind of a conversation. And then we are going to get a awesome demo of NettTracker. And then we'll go through our cool thing. Not something we did. It's not something we did this month. It's something else. It's something cool, but not something that we did. And then we'll talk about our next episode. So let's go ahead and jump right in to the open mic discussion. Managing fixed assets, not every accountant's favorite thing to do, right? Especially we have clients that don't really understand the rules about fixed assets, when they should be categorized as fixed assets, when they should be expensed. So we thought we'd start with kind of a recap of what the rules were, right? And the rules changed in the U.S. So excuse me, Canadian and UK listeners. I focused on the U.S. rules. Businesses back in 2016, they changed the rules. So businesses with audited financial statements can deduct items up to $5,000 per invoice or item, and small businesses or without audited financial statements can deduct items up to $2,500 per invoice or item. So that's a change from, it was always forever and ever, it was $500, right? So that is the new rules. And one of the things that was interesting that I just wanted to point out, because I don't think about this all the time, is, if you have a client and they spend, $25,000 on equipment, like a computer equipment, right? And they're actually spending $2,500 per computer. That whole $2,500 would actually be expensed under these rules, or the $25,000 would be expensed under these rules. So it's not just, if you have one invoice that's $25,000, that doesn't exempt it from being an expense. It's actually per item or per invoice. So that was kind of interesting.
Well, and that goes back to documentation is really important in that scenario.
Yeah, definitely. Yep. And then the IRS is not going to challenge a deduction as an expense if the amounts are substantiated with an invoice, like you said, Liz. If the book or tax treatment are the same, so if you're depreciating straight line for book and for tax, or you're using makers or whatever, as long as you're doing it the same, they're not going to challenge it. But you also have to do that ever important election on your return. So I'm putting my tax hat on here. You got to have that election that I think every tax professional now just makes standard for all of their clients that have businesses. So again, I don't have the Canadian or the UK tax law, because I'm US. So I don't know. Do you guys have it? Is there any big tax treatment rules that you guys can share?
Well, I don't really do a lot of taxes, but definitely that $2,500 deduction would be pretty awesome. I'm a little rusty on taxes myself, but generally speaking, what we used to be able to do is take roughly half of the entire amount on certain assets in the first year, but they have what's called a half year rule. And that's to prevent you from buying all this stuff on the 31st of December and then getting full deduction for it. They would only give you part through a depreciation pool. Now, it might have changed, so don't quote me on it, but I know we don't have anything that says the full $2,500 could be deducted, because that would mean effectively in a lot of space, especially in my space, I wouldn't even need to keep track of fixed assets for tax purposes, because I would just deduct them every year.
Right.
But I would probably still do it anyways, I think, for financial purposes, because it does say something for the nature of your books, right? If you have capital assets, the long-lived nature of them, there's still reasons to keep fixed assets on your balance sheet for reporting purposes. So I could see it using it for that, definitely.
Right. And businesses that are doing financial statements, that book and tax treatment aren't going to be the same, right?
Right.
You know, if they're doing GAAP financial statements, never going to be the same. So they would need to keep track of that. So yeah. So figured we'd start there. Ash, did you have anything to add as far as in the UK? Are there any big announcements?
I mean, so in the UK, there isn't really a specific value like that $2,500 that you've got there. It's more, and it can just vary from business to business. It can be, you know, when I was in practice, a usual guide could have been, okay, a lot similar to what you mentioned. If it was sort of less than £500, then we'd usually expense it. And if it was more than that, we usually capitalize it. But it might vary slightly, and it's just would be consistency through the books. And, you know, if you buy something for £500, you know, how long is that likely to last? Is it something that's really substantial that's going to last you for 5 years? Or if it's only going to last you 12 months, then no, you just write it off.
Yeah, and George is chiming in. Thanks, George. Section 179, right? So Section 179, we can, we can expense up to a whole lot more, right, for a small business in the first year if you meet all of the requirements to do that. So, that being said, if I'm taking a Section 179 deduction, I still want to keep track of the regular depreciation, and I'm going to need to do that for my fixed assets as well. So, yep, definitely a good point.
Yeah, I mean, that's the similar that in the UK that we could, tax-wise, we might have what they call an annual investment allowance. So you could, I can't remember what the amount is, but it could be £100,000 that you could literally claim as a tax deduction in the first year, but you would not put that through as an expense in your profit and loss. It's still got to go on the balance sheet.
Exactly.
Yeah.
And then you have your lovely book to tax adjustments.
Yeah.
Right. Yeah, no, definitely. And there we could spend this entire hour talking tax law, but we won't. We're going to move on to the next thing that kind of we wanted to focus on is, in QuickBooks itself, there's ways that you can track your fixed assets. And I'm sure all of our listeners have their own specific way to do this. This is just one way that, that I had thought of that you could track fixed assets in QuickBooks is you could use the product and services list, right? And if you use a product and services list, one of the tricks that I have is I'll put a little number 1 right here under the fixed, next to the fixed assets for the category. So I use the categories fixed assets, and then the actual product and services that you sell would be other categories, right? And that kind of groups them all together. And you could even do subcategories under that fixed asset main category for each asset class. And you could track your assets in QuickBooks that way. Is that ideal? No. If you have to make sure that you set it up so that the box isn't checked that you can actually sell it. And it also muddies up your product and services list. Your purchases reports are going to be muddied, right? So, because it's going to include your fixed assets and, the cost of anything that you're selling in your business. So it's a workaround, but it could be done.
But I like that you showed this because it does let you know that you have some options. But it's like you said, whenever you go to pull reports, especially if you have multiple people using the QuickBooks file, there'd be opportunities for them to accidentally type in vehicles, and now they're putting fuel to vehicles.
Right.
So there's opportunities for a mess if you've got a whole lot of hands in the books in this scenario.
Definitely. Oops. Let me go back. You can also create a purchases by vendor detail report. So you could create a report that was customized and memorized, that basically filtered by that the fixed asset product and service items, and then memorize it. Again, you're going to have to update it all the time, right? Because you're adding a new product or service every time you buy something. So this is not automated at all, but it's possible. So if you had a few, this could work. Just some ideas that maybe you hadn't thought of that you could do to that would make it, if you have simple fixed asset tracking in QuickBooks, it could work. And then you could also set up your recurring journal entry. So these are all things that you could just do in QuickBooks that would make it easier if you're doing everything manually. You could set up a recurring journal entry for the depreciation, the monthly depreciation that's getting posted to the QuickBooks account, right? And have that go throughout the year. And that would work. And I think that's what most of us do, right? We get the depreciation schedule from the tax preparer or the accountant, and then we make the monthly depreciation amortization journal entries.
I agree with you. I think that this is going to be the most common thing that we see. And then with that reoccurring schedule, I know that this has been my go-to workflow, but then you have to always make sure, did it post right? And then at the end of the year, make some adjustments. And so it's still not quite perfect.
It's definitely not perfect because as I'm buying assets throughout the year, they're not reflected in this journal entry. No. Right? So my profit is wrong. My expenses are wrong. Right? So, it's what we've done because we didn't have anything else. Right? We didn't have anything better.
Intro to Ash. Dum.
Yeah. Right? So common issues, incorrect categorization, right? Incorrect categorization, our clients, they're really nervous about tracking fixed assets and making sure that they're categorized correctly. Too many accounts. So have you ever had a client that had a different general ledger account for every single asset they own?
Oh yeah. I think that quite a bit. And that wasn't really a big issue until now we've got some limitations in our QuickBooks files. So
right.
Well, I have a client that I just worked on. I converted them. They're staying on desktop. They went from Premier to Enterprise, and we did it from scratch. Their balance sheet was 15 pages long. It was all fixed assets because they would set up a line item for every piece of equipment. It's a wine business, so it's a winery, and they have a retail side selling the wine. And they have a lot of assets on the books, and literally every single one. That's how they manage it. They were using sub-accounts, and they would have all these different categories within categories. And it was so unwieldy that I mean, managing by balance sheet is never wise. We know that. You want your summaries there. You want your balance sheet to be reasonably compact and then be able to look at the sub-ledgers. And that's the thing is, I know in the US, you guys have a fixed asset tool built into QuickBooks Desktop. We don't even have that in Canada.
Yeah.
So we've never had any sort of luxury to have any sort of fixed asset ledger. And I know that same winery client, and Ash and I have talked about this offline, about using it to manage fixed assets for a company that isn't even on QuickBooks Online. We're going to set up a company that just holds assets so they can calculate their depreciation and manage their fixed assets using that QBO tool. And then whatever entry it comes up with every month, we're just going to copy that over to desktop. And at least we know our fixed assets are managed, because that's the hardest part. You don't want your balance sheet to have all of these different details on there. And where else are you going to do it? Excel seems to be where most people do it. And we all know that Excel schedules have their own problems, especially if you have high volume of capital asset purchase like my client does.
Yeah, that's right. When I was in practice, it was Excel for everything. Every year end, it was going to be an Excel spreadsheet from the previous year. You open up another spreadsheet, and then you copy all of the last year figures into different columns. But you've only got to miss one formula or copy drag the wrong formula down, and things can go a little bit awry quite easily.
And when you're managing additions and subtractions of the assets themselves, and once they're fully depreciated, what do you do with them? they just get out of hand. That was my experience in the 20 years that I used Excel schedules. You really had to pay attention to the fact that you have continuity between periods, or else, like you say, Ash, you screw up a formula and you could be screwing up your depreciation calculation for a long time and not even know it.
Yeah.
Those pesky Excel spreadsheets.
Lots of opportunities for errors.
Mm-hmm. So one of the opportunities for firms, so that's what I wanted to talk about next in our discussion is, the big buzzword right now in our industry is advisory, right? How can we bring more value to the table with our clients? And you can actually have new service offerings, by taking on the fixed asset management for your clients, especially for clients that have a lot of fixed assets, and every year, it's something that's a big adjustment at the end of the year. Adding that service, which is easy to do, could actually bring a lot of value to the client.
Well, and just like what Brad was saying is that he's got some clients that have, I don't know how many pages you said, but pages of fixed assets.
15.
Look, that's what I thought you said. So
Yeah.
15, in that scenario, tax projections is a big thing.
Mm-hmm.
So every single month being able to know where you stand is important. And 15 pages, I can't even imagine trying to keep that straight, especially.
They're not very comfortable with the state of their capital assets right now because of that. In fact, where we are, because we've just started this new enterprise file, is we want to do a fixed asset count, make sure that everything that we think we have, we actually do have. So we're going to do an inventory, and that's where this is all going to come into play.
And
It's
you
a
may
big
not
deal
have
to
15
them.
pages anymore.
Well, that's just it, is just being able to have it all in one place and be able to look things up and have the ability to assign, codes, inventory type codes to the fixed assets themselves, and be able to know where everything is at any given time. It's important to this client.
It's
in
important.
addition to the accounting.
It is, and it's important to clients too, for property tax. So one of the things that we've always done for our clients, our new clients that come on, is we focus on the fixed assets, and we try to figure out, are these fixed assets, like you said, Brad, still something that you own? Because their property taxes are based on the book value of those assets. If they don't have that $45,000 piece of equipment in their warehouse anymore, well, guess what? At least in our state, some of our cities, they never fully depreciate. It goes down to like 20%, and then you pay tax on 20% of the value of that asset until you retire it. So cleaning up those fixed asset accounts for our clients, especially in Rhode Island, because our property taxes is done that way, is really important, and that brings a lot of value to the client. And they never even think of it. That's something that never even crossed their mind, and that can really add additional value, to your clients.
And from a capital budgeting perspective, when you're in a company that's capital intensive with lots of fixed assets, it's nice to know where those certain assets are in the depreciation stage. Like it's important to know what the net book value is, even though it doesn't reflect economic value. There's an approximation there, so if your assets are starting to be fully depreciated. Well, maybe we should look into replacing some of this stuff, or at least make sure we've got a maintenance schedule in place to make sure we can continue utilizing these assets. Because as we all know, when a fixed asset goes down, if your car breaks down in it, or your delivery vehicles break down, or your computers go down, it's often the capital assets that the company relies upon, and they don't realize it. So that's another big reason why managing capital assets is critical, and knowing roughly where they are. If you have no idea what the net book value is at any given time, it's actually saying, well, I'm not really sure how old this thing is. So
what you're talking about is clarity. Just everybody aware of what's owned and what's gone, what's broken, what needs to be replaced. Like Heather said, if you're going to be paying 20% anyway, maybe it's time to replace it.
Right. And if it's not even useful anymore, write it off. You can write it off now, because you can argue and say, well, I'm depreciating over 5 years, but it's 3 years in and I'm not using it anymore. Get rid of it.
Yeah.
And now you can just do it with a click of a button. And it's that pesky gain or loss that, that's always, I think that's why people avoid it. They just say, I'm going to wait for it to be depreciated because I don't want to deal with it in the interim.
Right. and all of this, the other service offering that is a little different is cost-seg work. So that's actually very lucrative. So when you have clients that are, building a new building, right? Putting a new building with offices and all kinds of stuff in place, that's a really important job to go in and look at the cost of that entire capital improvement project and try to figure out what can be expensed in the current year. It's an important part of tax planning. So not all firms provide cost segregation services, and it's very lucrative because there's not a lot of people out there doing it. So that's something that practitioners could look into as well. And then really just by tracking the fixed assets on a regular basis, perpetually, you're getting more accurate projections, more accurate financial statements, and better info for your tax projections and your tax planning. So, yeah.
Cool. You've said it all for me. I don't need to say anything.
Heather's just set
I'm
the stage
saving my voice for the demonstration. So
Yes.
We want to see it made easy. Very easy.
He makes it look easy. Trust me on that one.
I'll do my very best.
And all
that's
of this.
Why I know. That's why I love it so much. I haven't been. I'm still learning the tool, but it truly is. Once you got it set up, it's set it, forget it. That's the most important part. It's the setup is so critical because you are dealing with an opening period. So you got to make sure it's right. But once you're there.
Yeah.
But I'm looking forward to the demo because I have seen it once and I was really impressed with it. That's what got me so passionate about it. Now that I'm using it for real with a bit of a lag, it's taken me a bit of time to get used to it, but I can't wait to have it because it is so automated.
Yeah.
It make me want to go buy more assets just so I can see how it works, right?
Get an asset.
I'm doing some testing here. I need this new $2,000 MacBook just to make sure that the software works.
Just go and buy it.
Yeah, that's how I'm going to justify it. I need some assets for testing purposes.
Testing purposes.
Yes.
Well, it is the bottom of the hour. It's time to raise a toast to NettTracker. It's going to make all of our fixed asset tracking easy. So we're doing a shandy today.
I was out of lemonade. I just found out. So
you see my cup here?
I got full strength beer here.
This is my London cup that I brought back from last year. This time we were
I remember that.
That's right.
You got so many cool things. Was that a Harry Potter one?
No, this one was over at the Tower of London. So
right.
Big cheers with
big cheers. I love shandies. They're one of my favorite.
Yeah.
This one I've always made them with beer and ginger ale, though. I've never had one with lemonade, so I'm excited to try it. And then I also wanted to show that, look at my glass.
Oh, look at that.
It's a QuickBooks pint. So.
Okay, all right. Since we're sharing glasses, I brought this one up. I just forgot.
Has it got your name on it, Heather?
The Intuit mug?
It says Intuit Online Accountant.
Mine says QuickBooks Brad. Can't really see it because there's no background behind it.
Whoa.
That's awesome. Mine does not have my name on it.
That's very cool.
Mine's just a plain glass, I'm afraid. I can't. You beat me.
Well, Ash, you get to go to QuickBooks Connect in London, and I must say that QuickBooks Connect London was the only conference I've ever been to where app partners were giving out beer.
That's right.
Remember Chaser HQ? They were giving out beer.
They have their own beer.
And then there was the official QuickBooks beer, if you recall, those green cans. So, and you get to go to that, and we've got FOMO over here because we wish we were with you.
Yeah, Tuesday. Next Tuesday we'll be there.
I'm jelly.
Next year.
Send us some swag.
Yeah,
the liquid variety.
Okay, let's see. All
right, let's see NettTracker. So, do you want to take presenter role, or do you want me to go through the slides with you? What would you like to do, Ash?
Okay, I'll tell you what. I'll go straight into the product, shall I?
Yeah. So I'm going to stop sharing, and then you can.
I can
go ahead and share. And we do have some slides that we will upload with the recording, either later today or tomorrow, that will show some screenshots of what Ash is going to show us.
Hopefully you can see my screen all right.
We're good. We're seeing it.
Excellent. So yeah, on those slides that or some of those slides I sent across to you, it was like, doing your year end in 5 easy steps. One of the first things that you'll get is that once you've signed up and you've been using the NettTracker, is that as soon as it's reached the financial year end, you'll get an email that's basically telling you your company's reached the financial year end. So as a reminder, basically, that you ought to go in and start checking your fixed assets, and even preparing your accounts, really. So, so it's a good little reminder, that company's finished year end, I need to check the assets and then hopefully get the accounts prepared at the same time. So that would be step number 1. Step number 2 would be to actually log in. So I've already logged in. I've just gone to my login area and logged in. And now that I've actually logged in, my third step is basically I arrive straight on the dashboard. And when I arrive on the dashboard, the first thing I've got is this summary. So this is telling me here that this is the total value of my fixed assets. So on my fixed asset register, I've got assets that total £5,977.50. Now below that, what I've also got is the external book value. So this is the actual balance per my QuickBooks balance sheet. So this is coming through directly from QuickBooks. So this is my little reconciliation, and that's what I should be checking to make sure that I've accounted for all of my assets. The depreciation postings have gone through because that's happened automatically. So everything should be, actually in line. And now if I take a look, I can look at my fixed asset register. So this would be sort of step 4. I might need to review my assets. So I can look through and see, are there any assets that, might need the, disposing of. I can see there's one there already, which has been disposed. So I've got an iPhone, it's highlighted in green. So it's marked there as disposed within this year. Now, just before I go in and look at the year end, if I take a look at my QuickBooks file, if I just take a look at the balance sheet here on this one. So I've opened up the balance sheet. So this is to December 19. Now, when you set up your QuickBooks company file, what you should do right before you actually set up your NettTracker company file, I should say. So before you set up NettTracker, and you've got different asset groups. So if you've got an asset group for computer equipment, then what you should have is you should have your accumulated cost, which on this one I've got is computers brought forward. So I've got computers brought forward. That is one of my chart of account codes. And now also within that, I've got computers within the year. So if any purchases are posted to that account. And I've also below that, I've got depreciation brought forward. So what was brought forward up until December 18. And then I've got my depreciation within the year. And if I've made any disposals, then disposal depreciation is adjusted. So I've got disposal depreciation adjustments within there, and I've also got disposal cost within there as well. And if I come down and look at so that's the total of my net assets, net fixed assets, 597,750, which is the same as my, if I come back to my dashboard, which is my 597,750. So I'm happy that everything on my fixed asset register is fully in line with my accounts. So the next thing that I need to do then is I can go and actually run the year-end process. So if I go to the year-end process, this is the same view that you would get if you were actually processing depreciation. So I've got here, this is the depreciation that's been posted throughout the year for each asset. The iPhone is now grayed out because that's the asset that was disposed. So there's no, if you do actually have depreciation that goes through on an asset and you dispose it, then it reverses all of the depreciation journals automatically. So I'm happy with everything I see. I can just start my end of year. So I'll just click start end of year. Now what this will do, if I click complete my year-end process, it will start doing some checks. So if I've actually purchased some assets, but I've not run the depreciation on them yet, it will, prompt me. It's making sure I've done some checks. If I actually purchased some assets and not added them onto the fixed asset register, it will warn me that that is also the case. And I don't have any assets in a sort of a warning state. I shouldn't have any negative value assets, but I'm just checking that. Now, before I complete the end of the year, what I could do is, if I had any assets with an outstanding balance, so I've got assets there with the net book values. If, say, I wanted to adjust that for any reason, put extra depreciation through, I could put an extra, if I click in the pencil, so I actually put another £200 worth of depreciation through. So I can see now that my end of year asset value is going to come down. And if I wanted to change it back, so I'm not actually going to write that off fully, I'll put that off back to 0.
So Ash, sorry to interrupt.
That's fine.
Further to my case, this is where I want to write off those 5 assets that don't get depreciated in the first year, but they're going to have some net book value, correct?
That's right. Yeah.
Take it off in one liner. Okay, that's perfect.
So let me do it with this one here. So that was basically 600. So that should then bring that. So that brings my end of year down to 0 now on that asset. Perfect. So what I can do now is complete my end of year. So that will start. This was going to post an additional journal in for that extra 200 or 600 pounds, and it's also going to post some year-end journals, which we'll see how that affects things in a second. And that's my new financial year end. So the financial year in NettTracker is always 12 months, but you can shorten it if you wanted. If you wanted to do a 6-month year, you could put in, in 6 months' time. If you wanted a 15-month financial year, I don't know if you ever have that over in the States or Canada. Sometimes we might have it here in the UK. Then again, you'd have a 12-month period and then a 3-month period. I'll complete the year end. So that process, the additional depreciation journals, my year-end journals. What I've got now is a new forecast for my assets, which have got values there. Now, before I check QuickBooks, if I come back to my asset register, so this is my new asset register for my year that I'm in now, January 2020 to December 2020. I can at any time, if I click on this little calendar box, I can look back at any of the other asset registers that I've put in there. So on this sample company, I set one up starting from 2016. So I could look at the register for 2016 and see how it stood then. And I can come back to see where we are now with our current fixed asset register. If I go back into QuickBooks, so as of December 2019, this was what my balance sheet looked like. Now, if I actually change this to 010120, actually I put the 31. If I run that report, so this is my balance sheet as of January 2020. And if I choose to look at the previous period and run this report, so as of December 19, so what we had is we had our additions in 2019. So my 15,500 at the end of 2019 is now part of my brought forward. My depreciation, my sort of accumulated depreciation figure at the end of 2019 is now part of my brought forward depreciation, because at the end of 2019, all of these journals have gone through and corrected. If I actually open up 2020, I can see that as of 1st of January, it's put through the sort of year-end journal, changing all of my brought forward balances. And what I'll also find, if I was just sticking within QuickBooks, so all the way through the year, so once you set up the NettTracker, it's going to start tracking my fixed asset purchases, and it's going to automatically put the depreciation journals on for me. So the benefit of that then is, if I just come to my reports and run a standard profit and loss. So if I run the standard profit and loss and look at this by month, then I'm going to have, monthly depreciation going in every single month. And if I open that up, I can see that's the depreciation journal that's being posted for me. So although I might have 6, assets within computer equipment, I'm only going to have the 2 lines between computer equipment and the profit and loss category. Now, I'll just close this down a second. So I've got a couple of new purchases in here for 2020. One thing to bear in mind is that the asset summary balance that comes through in NettTracker will depend upon the report tool option in here. So I'm actually going to change this now to January 2020. Quite often it just defaults to the last month or the if an accountant has set it, to a prior year, it will always just stick there. Now, if I take a look back in my NettTracker file and come back into my dashboard, do a little refresh here. I thought I had some purchases in this prior year, so let me just do a refresh and also just, there we go. So I can see my external book value here is now 8,377. My NettTracker value is 5,377. So I've got some new assets which haven't been added onto my fixed asset register. Now I can have NettTracker set up to automatically add those new purchases on for me, but that usually sort of the new purchases normally happen sort of overnight, once a week. Depreciation will happen automatically, once it hits that month end, or if you've just set Quick NettTracker up and you've got a year's worth of depreciation, it will catch up, and it will, as soon as it hits that sort of month end, it will automatically put the depreciation in for the last 12 months. But if I look at my transactions, so I've got these transactions now. Let's just refresh external data. So I've got 2 transactions in this pending. So very much like the way that you review bank feeds in QuickBooks Online, this is where I can review my new asset purchases. And because of the way that I've set up this NettTracker file, so anything that's been posted into the chart of account code for machinery and equipment will automatically be posted into this asset group, machinery and equipment. I can't change that. So all of the things that have come through from QuickBooks are grayed out. I can't make any edits. I can set up a default depreciation rule against the asset group. I could change it if I want to here. And I can change the description. If I want to use class tracking, I can use class tracking and make sure that my journals have the class associated with that as well. So I can quickly add those assets on. I'll just create those so they get added. And what I'd find then, if I came back to my dashboard and just did a little refresh, my fixed assets and my balance sheet are now back in line. And if I was to take a look at my asset register, I've got my current year purchases. There's my MacBook is now within my current year purchases. My lawnmower is within my current year purchases. Now, because I've actually gone past January, if I come back to my dashboard, I've now got assets that need processing. So I can choose to process the depreciation. So currently depreciation is highlighted in blue for assets which have not yet had the depreciation calculated. I can choose now to process those assets up to the 31st of January. And again, that's going to create the depreciation journals for those assets. They're now in green, reflecting that the depreciation is posted. And if I just come back to the dashboard again, my external book back value is not updated from QuickBooks. Probably just need to do a refresh within there because it's still looking at 2019 balance. But you can see hopefully how that automates everything. How am I doing for time, Heather?
We have about 7 minutes left, so you're doing fine.
Okay, cool. So a couple of other things then I can just point out, because I didn't want to go through the whole setup process, but because this file is already set up for us. But if I went into the settings, for example, so in my settings, I've got depreciation rules, so I can add further depreciation rules within there. So you get some defaults and you can add your own. And then you've got your different asset groups, and there are some defaults, and you can delete or rename any of the asset groups. And I've just left it so I've only actually got 2 asset groups. And for these 2 asset groups, these are the chart of account codes that are being used within each asset group. So I've got those cost in year, depreciation in year, disposals, and my brought forwards from my year-end journals. So for both of those asset groups. And with the profit and loss categories, you can choose to share them with all of the asset groups. So some accountants will just put everything to one profit and loss code, whereas other accountants will like a separate profit and loss code for each asset type. So that would be your choice if you wanted to do that. Again, within your settings, you've got the option in company settings to turn on or off any of these automated features like automatic journal postings, automatic refresh, automatic posting of new asset purchases, and whether you want to use the class feature, and whether you want to automatically write off any assets once they reach a certain value. It will automatically create an extra journal adjustment to basically get it down to nil. And also within there, if you want to invite other people within your firm, so if you're in an accountancy practice and you've got half a dozen or so or more people working within your team, and you want to add other users so they can look at this client, you can choose to add further users, and you can even add the client themselves to actually review their own asset register. So there's different types of user levels if I followed the invite user as to what they can and can't do. So that's it in a nutshell, really. I could probably talk another 10 minutes, but if there's any questions on anything, if you need to dispose or delete any assets, the options are there for deleting and disposing. And again, all of the journals should auto create for you.
We don't have questions right now. I think that everybody's kind of in awe, like I am. You did several things that made me go, oh my goodness, this is great. Because we know that our clients make purchases and they know just enough to be able to say it's an asset, but other than that, meh. And,
Right.
Sometimes it's a stretch to even say they make it that far. So, man, it's fantastic that
It is.
it's catching those purchases and then letting you do something about it.
So I have a question. When you were adding the new assets, so when you went in to add the new assets that were pulled in from QuickBooks, and you said you couldn't change the asset class that was mapped to the account. If I did want to change that, I just go back into QuickBooks and reclassify it, and then will it adjust it, or is there a manual process?
Yeah, that's right. So if they'd coded it to computer instead of machinery,
yes,
then they should go back into QuickBooks and change it, and it should refresh and cut and amend. The other thing would be, let's say, for example, someone bought a box of printer paper, and they'd put it, instead of putting it to computer consumables, they'd put it to computer equipment. and you've all got it to set to automatically add the asset on, then if an asset has been added, so I can see that depreciation has been posted on this one. Now, because this asset is one in this financial year, I could just delete it. What that will do is that will remove that asset from the asset register. Any depreciation that might have been posted in a journal, it will create another journal to move it the amount the other way. So if I was to look in my QuickBooks, hopefully, if I just done a quick refresh, it posts it the end of the financial year. But if I look at it, it's put in an adjustment basically to reverse any depreciation I put on for that asset I added by mistake. And then I just go back into QuickBooks and reclassify that posting to somewhere else.
Right. And the other question that I had is, right now there's only one, you can only assign one depreciation method for each asset, correct?
No.
No?
So when you you've got asset groups,
right?
And you've got depreciation rules. So what you can do is you can so you've got different rule methods here for depreciation, and you can create your own against each asset group. So like computer equipment, for example, if I look at my asset groups. So computer equipment, I've got a default of 5 years straight line. But if I were to actually come back to my transactions, it's popped back there because I've not actually changed it in QuickBooks.
Right.
So if I were to go into pending to create that asset, it says that the default is 5 years straight line, but for that particular asset, if I want to use a different one, I can use a different rule.
Okay.
And I can create as many rules as I want.
Gotcha. Cool. Well, that's
I'm excited about trying it.
Me too. No, I think this is fantastic. It really does make it easy.
Yeah, it does.
Awesome. So
I'm hoping it will do.
I'm going to launch real quick our poll. If you would like Ash to reach out to you with more information on NettTracker, go ahead and fill out the poll, and I will be sure to pass along your information to him so that he can get you set up with a trial and you can learn more about it.
That's right. Because I mean, at the moment, we're allowing accountancy firms one file for free anyway.
Awesome.
So they can use that, and there's no time limit on that, so they can use it and practice and make mistakes, do what they want with it. And if you're not an accountant, even if you're not an accountant, but you're just a small business owner yourself, you always get 1 month's trial for free anyway.
Fantastic.
And there's also, if you get, as soon as someone signs up, I'll make sure that an email is sent with the user guide, because I mentioned to yourself and Liz earlier, it's as easy as it is. If you're, everyone's a bit different at getting things set up, and it's quite easy to jump in and you think, it is really easy, which it is to a good degree. Yep. But if you read through the guide, it makes it even easier. The guide will take you through what you need to do step by step. When you set up the wizard, that is going in steps, and the guide sort of falls in line with that. And also there's that little video that I send out, make sure your QuickBooks is set up with these particular chart of account codes to make things easier for you moving forward.
Well, the thing that I like what you did, so what you're talking about is there's a YouTube video about how to set it up for those watching. But the thing is this is new to us. So we haven't had a tool like this before. And of course, anytime that there's something new, you want to have some really good education. Here's how. So I think that once you get your head wrapped around how to, then it's really clean. And then there's less holes. So, that's the thing that I'm most excited about is, once the learning curve's over with, gosh, moving forward looks 10,000 times easier.
Yeah, we are aware the biggest learning curve is actually setting it up. But actually, once you've set it up, you don't actually need to do anything after that, pretty much. once it's set up, you either add an asset, you dispose or delete, and there shouldn't be really anything else more to it than that.
Yeah.
Nice.
I totally agree, Ash. As someone who just finally went in and played around with it, it really is that setup part. And I was just being a typical guy. I wasn't asking for directions. I wasn't looking at no instructions. I just wanted to use it.
Yeah, Brad, you are not the first person.
Yeah.
You are not and you won't be the last.
Yeah.
Is why I try to sort of say, please read the guide because it really will help you.
Right.
But I've got to say that the way that you've got a template set up to put in your opening fixed assets is massive, because I already had that spreadsheet together anyways. I knew what I had in my categories, and being able to just upload a spreadsheet into the tool and then start your asset ledger or your register. That's brilliant, because I don't have to worry about setting it up manually. I can just quickly set it up and then start using the tool.
Yeah, thanks, Brad. Yeah, I forgot to mention that. So, because quite often people would rather, start this when they're about to start their new financial year. So if you have got those old assets on the spreadsheet, then we do have that template which you download. You can copy and paste your assets in there and hopefully upload them, to the asset groups that you've created.
No, it saved a lot of time, because then you bring it in exactly like you want to. And then once you've got your opening balances set up, it's just a matter of following the process and adding assets is so easy now. Because like you say, you put it into QuickBooks and then you just match it up as if it's almost a bank feed. I love that part of it. It's just being able to know that you've picked up your additions. And like you said, if you miscode something and there's something in there that shouldn't be, then you can deal with it. It's there. It's telling you it's there. And that's huge.
Yeah.
And it adjusts the depreciation for the miscalculation. That's huge.
So, Heather, are you trying to tell us that somebody's getting married?
I am. I'm trying to tell people that okay, so not necessarily, they're still in the talks, but there was a news, or it was out on the major news platforms over the weekend that Intuit is in talks to buy Credit Karma. So so it's interesting. They have QuickBooks Self-Employed now. They've got TurboTax. So it'll be interesting to see what evolves from this. I think that from the article that I read, it said they're planning to keep Credit Karma separate from the rest of Intuit's offerings, but I think that there could be a very symbiotic relationship there between Intuit's offerings and what Credit Karma brings to the table.
Which makes sense, because there's a lot of apps out there that are looking at credit worthiness, and that's a big issue whenever you're going before a bank and looking for a loan. So of course you need to stay up on not just your personal credit, but also business. And
so that was interesting. And there's a new, we're on a new leadership now with Intuit, and I think we have a newish direction. So it'll be interesting to see what happens with this. And, Credit Karma just in the last year or two, maybe it's longer than that, has been offering their tax service. So, that was a direct competitor of TurboTax. So that's, that's strategic for them as well.
So many users too that are going to use both, right?
Right.
You might have Credit Karma users, and then you can introduce them to Mint and TurboTax and all that good stuff, and vice versa.
Definitely. The Credit Karma tax, I think that's the piece that will be interesting to see what happens with that.
I would imagine that would go away.
I think so too.
I think that would go away, and it would be more TurboTax. So that's my thought anyway. If I were,
what do we know though?
What do we know?
You got to get Cezanne on here and explain himself.
Yes. What are you thinking? No.
Just tag him. Come on over, Cezanne. Talk
come on
to
over.
us.
Tell us what you're doing. Yeah. No, I think it'll be, and I think it's a natural. It's a natural, and I kind of, when they started offering the tax service, I kind of raised an eyebrow at that, saying that is a direct competitor. So, not super surprising here.
Yep.
So anyway, that was our kind of coolest thing. It was like, wow, it's amazing. They're going to pay a lot for that. $7 billion.
Yeah,
is what they're saying they're going to spend on that acquisition. All right. Well, Everybody, thank you so much for joining us today. Make sure that you check out our website. We'll have the recording for this session and all of our sessions on the website. You'll be able to connect with our sponsors and the apps that you've seen on Appy Hour. You can also get our drink recipes, read our blog, or just send us a message. Just say hi. We had somebody drop in and say hi to us yesterday. It was really nice. So, yeah, definitely do that. And don't forget to visit NettTracker's website. Remember, you get that free trial. So you can sign up for that trial, hook up, a client or maybe yourself and give it a shot, because I think it automates it. It totally automates tracking your fixed assets, and who doesn't love that? Also, you can join our Appy Hour Lounge Facebook group. One of the things that's different, Liz, I don't think we've said this before, about our Facebook group than some of the other Facebook groups, is we're like open to everybody. Our developer friends and our accountant friends are in there. So, if you're a developer that's hanging around in Appy Hour, we want you in there. So please do join. We will let you in. I think we're public group now too. And then register for Zoom, because we have some questions and chatting going on in here, and we love you guys to see you guys on Facebook too. We're definitely chatting with you, and you guys are having your conversations out there too. But you're welcome to come into the Zoom room at any time. And as Liz said at the top of the hour, next week we're going to have, next episode, we're going to focus on desktop. So build a desktop ecosystem in the cloud with Right Networks. That's going to be on March 10th at 4 o'clock. So we're going to be talking about, hosting QuickBooks, hosting apps that work with QuickBooks Desktop. They also now are hosting tax applications like Lacert and Pro Series. So we're going to talk about how you can build your entire ecosystem using desktop-based apps in the cloud. So huge thank you, Ash, Brad. Thank you so much for joining us.
Thanks for having me. Yeah, it's been
Me
a pleasure.
too.
And thanks, Brad, very much for joining me and helping me out, doing all the talking for me.
Well, we were hoping we could meet in London, so this is the next best thing. But
Right?
yeah, it's a great tool. I can't say enough. This is definitely one of those tools that I could have used in a past life. I like using tools now, and I think if I could have used them 20 years ago, how much my life would have been better. And this is definitely one of them. I know you mentioned that you're even dabbling with other balance sheet accounts that are a pain to deal with. So you're on the right track with this one, no doubt.
Yeah, we'd like to look at other things like prepaid expenses and tracking those and getting those all neat in one place, and loans and other things, but we're going to do one thing at a time.
Well, it feels like all of those lesser paid attention to tasks is what you're handling here. So it's nice to be able to say we gotta pay attention to them and not ignore them, or just address them.
People don't pay attention to them because they're hard and they're complicated, and we make a lot of mistakes. So having something that's handling that for us is huge.
And just waiting for the tax accountant isn't really necessarily the right answer. It's so much better that if you can do it proactively,
right,
just get it done.
Agreed. Well, everybody, thanks for tuning in, and we look forward to seeing you next time.
Bye, everybody.
Thank you. Take care, everyone.
Bye.
Bye.
Bye.